Hello, traders, and welcome back to Explain the Charts. Today, we're going to take a look at USDCAD, the US dollar versus the Canadian dollar, and we'll be delving into the news and chart data to see if we can understand where this pair might be headed in the coming weeks and months. So let's jump right in and start with the current news. Recent Google search results for USDCAD reveal significant interest in the pair, particularly regarding its potential direction. Many are asking about the USDCAD prediction, whether it's a buy or sell today, and whether it's bullish or bearish. The focus seems to be on the upcoming U.S. inflation data and the presidential debate. Analysts are predicting a further dip in inflation for August, which could lead to a rate-cutting cycle by the Fed. This could potentially be negative for the U.S. dollar. However, some analysts believe that a potential victory for former President Trump could strengthen the USD. It's important to remember that the Canadian dollar is also under pressure due to expectations of further interest rate cuts by the Bank of Canada. The diverging central bank policies of the US and Canada could continue to be a key driver in the USDCAD pair throughout 2024. Additionally, the correlation between the Canadian dollar and crude oil prices is likely to hold firm in the coming year. A global growth slowdown could lead to lower crude oil prices, potentially negatively impacting the Canadian dollar. Now let's move on to the charts and see what they tell us about USDCAD. First, we'll take a look at the daily chart to get a broader overview of the recent price action. As we can see, the daily chart shows a clear downward trend for USDCAD. The pair has been consistently dropping for the past few months, and this trend seems to be continuing. Looking at the candles, we see a series of red candles indicating selling pressure. The price has recently broken below the 1.35 level, a key support area. This suggests that the bears are in control. However, it's worth noting that the price has bounced off the 1.33 level, a previous support area. This could signal a potential reversal or a short-term buying opportunity. Now, let's zoom in and analyze the hourly chart. The hourly chart provides a closer look at the recent price action. We see that the price has been consolidating within a narrow range between 1.3550 and 1.3626. The 14-day Relative Strength Index, RSI, is currently in the bearish range, further supporting the bearish sentiment. The price has been struggling to break above the horizontal resistance at the May 15th low. This area was previously a major support level and could be a significant barrier for USD bulls. A break below this level could trigger another drop in USDCAD. However, there is potential support at the April 5th low and the psychological support of 1.3500. These levels could provide a temporary buffer for the price. Now, let's examine the 15-minute chart to gain even more granular insight into the price movement. The 15-minute chart shows very short-term price fluctuations. Here, we can observe how the price is reacting to recent news and events. We see a few green candles indicating buying pressure, suggesting that traders may be trying to take advantage of the recent dips. However, the overall trend is still downward, and the price seems to be struggling to gain momentum. It's important to stay alert and observe how the price is reacting to the news and potential economic releases. A break above the 1.3590 level could signal a shift in sentiment towards the bullish side. On the other hand, a drop below the 1.3471 level could validate a break of the 2021 uptrend and lead to further losses. Looking at the broader picture, it's clear that USDCAD is facing some headwinds. The bearish sentiment is fueled by potential interest rate cuts by both the Fed and the Bank of Canada. The global growth slowdown could also weigh on the Canadian dollar due to its dependence on oil prices. However, it's too early to rule out a potential reversal. The price has shown some signs of support at the 1.33 level, and a break above the horizontal resistance at the May 15th low could signal a shift in momentum. It's crucial to stay informed about the upcoming news and economic data releases, particularly the U.S. inflation report. These releases could have a significant impact on the USDCAD pair. Ultimately, the USDCAD outlook remains uncertain. The pair is likely to remain volatile in the short term, influenced by the conflicting news and economic indicators. However, the long-term outlook is more optimistic. A break above the 1.3605 level, which coincides with the 52-week moving average, could suggest a potential bear market recovery. But if the price closes below the 1.3471 level, it could confirm a break of the 2021 uptrend, indicating further losses. It's important to be nimble and observe the closing prices for guidance. Keep a close eye on the key support levels at 1.3471, 1.3342/59, and 1.3218/25, and the resistance levels at 1.3605, 1.3680s, and 1.3753/77. These levels could provide valuable insights into the potential direction of the USDCAD pair in the coming weeks and months. Remember, the market is constantly evolving, and it's essential to adapt your trading strategies accordingly. Stay tuned for our next video where we'll continue to analyze the USDCAD market and provide you with the latest insights and strategies. Thank you for watching Explain the Charts. Don't forget to like, subscribe, and hit that notification bell to stay updated with our latest videos.